Last week, traders saw the first piece of meaningful action to get their teeth stuck into. This was aided by volatile reactions from the non-farm payrolls data and the FOMC meeting minutes as well. This was the week where traders and investors returned to normality, but it certainly won't be a typical year. Hello, I'm Connor Woods, market analyst at ForexSignals and howtotrade.com. Here is our weekly preview for the 9th to the 13th of January 2023. The joy of the new year for policymakers all over the world will be short-lived as traders are demanding answers to questions regarding topics such as inflation and recession. No doubt the events of the week will be the Federal Reserve Chairman Jerome Powell's speech and the hugely anticipated consumer price index data. This promises to be a very exciting week indeed. So let's dive into this week's biggest opportunities with our expert analyst in the States, Shain Vernier.
Hello everyone, welcome to week 2, 2023's trade. Now this week's going to be a bit fast and furious. We've got several key events. The headliner is Thursday's US CPI. So we're going to start off on Monday with the EU unemployment rate. That could be a key market driver for the Euro USD. Tuesday, Tokyo CPI. There's our inflationary narrative for the week. That's going to be the opening salvo and really going to put a little bit of emphasis on BOJ actions moving forward. We're going to look at the Nikkei 225 for that. Wednesday, Australian retail sales. Not necessarily a 3 or 5 star market mover. It really does depend on the release. This week, I think we could get a little bit of action out of the Aussie. However, later in the session, you've got that WTI crude oil inventories report out of the EIA. That could definitely be a market driver for that Aussie CAD. So we're going to look at that commodity pair as well. Thursday, US CPI, key market driver for the entire week, maybe the key market driver for the entire month. It's going to set the tone for 2023. We're going to take a deep dive into US CPI on Thursday. Also, we're going to look at that US 100 in the midst of all that action. Friday, we're going to wrap the week up with the Michigan Consumer Sentiment Index. Used to be a 5-star market driver. Not necessarily the case anymore, but I do believe that we're going to get a little bit of action there. So to open up the week, we're going to look at this Euro USD. Now, last week, we had really a tremendous pullback here on the weekly chart. You can see nice bounce right to 50%. We were down there with bells on at 62%, looking to buy 104.25s. Didn't quite develop. We went to 50%, right around 104.78. Since then, it's been just a crazy amount of bids hitting this market. So we're back above 38%. Still fairly bullish here on the weekly time frame. Now, one time frame that I'm interested in going into early week trade, when I do anything on an intraday basis for Forex pairs, it's based on the 4-hour chart. So right here, if you take a good look at your 4-hour range for what I would call my NFP range, you have a tremendous range to work with there from last Friday's session. So right there, you've got your lows, boom, then you got your NFP number, and then right here, you're looking at a pullback maybe around 105.84, 106. It's going to be fascinating to see early week price action. If this spike high, Friday's high, it really does hold, and you get that rotation back down into this Fibonacci sequence, may have a nice buy down there from 105.84. We'll be watching that one closely, the Euro USD. Now for Tuesday, right in the midst of that Tokyo CPI, we've really got the Nikkei in a pretty good position here. You've got 3 big negative weeks on the Nikkei. Really, since we broke beneath 27,000, the bears have been in complete control. The sellers have been in complete control. And if we do get a situation where that 38%, maybe we get a rally on Tokyo CPI. Maybe something comes into view that says, okay, we're a little bit bullish now on Japanese large caps. We could be looking at stepping up and selling 26,635 if we do get a nice bounce. Now look what you have here: 3 negative candles in a row. You've got sort of a tight, even though we traded beneath the previous week's low, very tight range on last week. So if we do get that upward trajectory, we may be able to step up and sell from that 38%. I'm liking that level a lot, really going into early week trade. Now Wednesday is going to be really a key time. Now we've got CPI on deck. You've got the Australian retail sales is going to be big, but you also have that EIA crude oil inventories report that usually drives a tremendous amount of action to crude oil. So when we have action in crude oil, we have action in the Canadian dollar. And when we have Australian retail sales coming across the boards, you know that the Aussie is going to see a little bit of that impact. So this Aussie CAD really could be a pair, one to watch as we move into midweek trade. So for me, you take a look at the longer term technicals. This is just a look at the daily chart. You can see how frenetic and chaotic the action has been. A lot of that's been because of the gold market, and a lot of that's been because of the crude oil market. So when I look at this chart to the top side, I would definitely be cognizant of something like a 92.69. But bigger picture, what I want to try to get accomplished here for this midweek trade, I would want to go right back to my 4-hour chart and really take a look at, okay, how did NFP impact probably the largest commodity pair, pure commodity pair on the planet? You can see that the action was absolutely frenetic last Friday. So I don't expect price to trade within this range range. So I would definitely say, okay, what's going to happen here? I would go right back to like a weekly chart, and I'd say, all right, do I have any levels I can work with here at all? And the answer is yes. We're looking potentially to buy a pullback. You can see the longer term actions bullish. You've got a little bit of compression and a nice little 3-week range. So let's say we wanted to get long and join the prevailing bullish action. Something like that might work beautifully. I would be focused in this situation, hyper-focused on the 62% retracement, 91.58s, 91.50s. We're a little bit off of that pace right now, but going into midweek trade, the commodity markets have been alive and well. I think that we may get an opportunity on a pullback here from that 62%. So that's the level I'm going to be watching very closely for that Aussie CAD. Now, Thursday is the day. I mean, it is the day for the entire opening month of the year. With the Fed coming up on February 1st, everybody in the world is going to be watching U.S. CPI. And just to read a few of the projections right now, we're looking at that. This is the key headlining event, if not for the week, for the whole month. You look at core CPI, we're looking at 5.9 expected down from 6.0 previous. And for regular CPI for DEES, that was yearly. That was year-over-year CPI, core CPI. Year-over-year CPI, 6.7 expected, down from 7.1% previous. Now, I typically focus on the month-to-month metrics here with CPI, and we will certainly do that during the week, but we have to focus on those yearly metrics now. Remember, December wrapped that year, so now we're talking about where are we early January compared to last early January. That gives us a great metric to if, in fact, the quantitative tightening of 2022 has been a big deal and effective from the Fed. So when I look at those CPI metrics, by and large, we're expecting to come down big time on a yearly basis, year-over-year basis. If that develops, if it doesn't develop, either way, going to be a monster market driver. I'm going to be watching the US 100. This is a fascinating asset right here, a CFD asset that it's based on your NASDAQ 100 and also your NQ CME futures contract. But when I look at something like this, we've been spot on with our COVID range, 2020's panic lows to those euphoric all-time highs. And you can see that we've pulled right back to 62% of that move, that bullish move. So technically, we are still in a bull market here for the NASDAQ. But honestly, it is make or break time. 10.517. If you've watched any of my live streams, 10.517, 10.525 is going to be absolutely huge for me. If we get a test of that zone, maybe a potential buying opportunity, short-term buying opportunity though. We have to be cognizant of this spike low back for October, early October. This is a monthly duration chart. October's low. Once that gets wiped out down around 10.434, once this area is taken out, really the next port of call is 88.15, and then we start talking about deep recession, possibly a depression, things like that, at least for the tech sector. So when I'm looking at something like this, I am hyper-focused on 10.517. In my view, it's been an exceedingly tight whipsaw month for the NASDAQ 100. I think that might break a little bit this week. Okay, for Friday, we're going to be looking at gold. Now, the key market driver for Friday is the Consumer Sentiment Index. It used to be a very big deal, a 5-star event. Not so much anymore. You used to be able to buy data feeds that would give you the index about 10 seconds before the public. I haven't heard of that really much lately. In any case, moving into the weekend, I always like to look at gold. I think that gold's a key market on a Friday just because you have folks that are piling into safe havens and also folks that are also positioning themselves for the coming week of trade. So when I'm looking at the gold markets right now, I think that right there from those Russia-Ukraine highs up around 2070 all the way down to our triple bottom down around 1600. That's the key level for me in gold for 2023 is that monthly triple bottom that formed really last fall. You can see it right down around 1600. We are well above that now. I'm looking at 62% of that range, it being at 1896. Now, I love the way that comes into contact or really within the proximity of a big round number of 19. I think that could be a very nice trade to the short, maybe for 10 or 15 on just a standard 1-to-1 ratio. So I think maybe a 1892 somewhere in that area going short could give you a nice $10 to $15 payoff with a stop loss probably up above 1905 somewhere, not too far above 1905 though. So that's really a wrap on the trading week. I think it's going to be fantastic. CPI is the headliner. We've got a lot of other events as well. I think the week really starts in earnest with that Euro USD and those EU employment reports. We'll just have to wait and see how the price action unfolds, but trade it well, and we'll see you in the trading room.
So, with a tempting mix of US, Japanese and Australian inflation data, European unemployment rate, policymaker speeches and consumer sentiment in the US, we have plenty of opportunities to explore this week. As always, our team of analysts will help you guide you through these opportunities every day in the trading room, ensuring a high quality service. We'll help you make the most informed trading decisions and of course, be with you every step of the way. Until then, trade well and we'll see you on our next live stream.